Okay, so you guys are forgetting one vital part about the other block, and I said it at the beginning. All right, another block is an area in price where there was a lot of buying or selling previously. This means that that was probably the beginning of the impulse move. Okay, I won't say probably. This means that this was the beginning. All right. So the other block is always the beginning of the impulse move. So the big mistake I notice most of you guys making is that you only select the body of the candle you are choosing. All right. You only select the body of the candle you are choosing, and that's not right. If if you have Yes, so now zooming in here, all right. So let's say we're taking this last candle as our other block, all right. What some of you guys usually do is that you select only the body, all right. Select only the body and say that is your other block. Okay, so the body alone is not the other block, especially if you have this week under, all right. So if you have if you have this week under it, you're not going to select just the body. All right. So this week is where the trend started. So the impulse move didn't start from here and start going up. All right. Where the impulse move started from was down here at the week. All right. It was down here at the week. It was down there at the week. So it started from down here and went up. All right. So this is one big mistake that you guys make. So if you're trying to identify the other block, the thing is that we don't usually want a week. We don't usually want to see a week. So we can go down to a lower time frame to find the actual other block. So the other block in this case, it is sitting somewhere in this candle. All right. So we'll just choose this candle. We just choose the entire candle and go to a lower time frame and look at uh and try and find what we like. So what we like is we want to see the candle that has a body like this and very minimal wick. So let's say the wick will be very, very small. So the wick may look like this, just very small wick. Okay, so we're looking for a wick that is very, very small. Okay, this is not refuse to stay in the middle. But anyhow, we're looking for a very small wick in when we are looking at an other block. All right. So the body alone of this candle, okay, if you choose only the body like this, you are wrong because you are not starting your um you're not starting your zone, or you're not starting the other block is basically a support or a resistance. So if you choose only the body without going to take out without also choosing the beginning of the impulse move, which is down here, you are wrong because you are refusing to acknowledge where all the buying started. Right. So basically the short part of what I'm saying is just we are going to look at the lower time frame to find the valid one. So we can check. Let me start with the 5 minutes. That was a 15-minute chart. So we'll go down to 5 minute chart. All right. So if I chose my body now, if I chose the body of that one, you can see that there's this one that is lower. All right. So this is the one that started the move. So you're looking for the exact one that started the move, not just anyone that has a week in it. All right. Sorry, not just anyone that you see on any time frame and choose only the body. So you can see that as you chose only the body in that case, you are neglecting all these things that happened down here. And this is actually where the impulse move began. All right, this is actually where the impulse move began, not at this point that you marked out. So that's what I'm trying to let you guys know. All right, so that is one mistake I found. All right, but let's now choose this candle lower as our other block. So I'll choose it as my other block. I'll choose it as my other block, and I will neglect the week because the week is quite long. All right. So if the week is very small, I can add the week, but I'll neglect the week here. All right. So that will now be my other block in this case. All right. I might even go to a lower time frame than this, but let me just check if I can make any changes by going to a lower time frame. So I'm checking another lower time frame to see if I can change anything. Okay, nothing like what I want to see. This Escobar, I've never seen you in my class. Okay, so I see something even better here. Okay, so I can now refine it to this candle's body down here. Okay, I can refine my other block to that lowest candle. So you can now see that this is the guy that truly started the trend. This is the guy that truly started the impulse move. So going back to the definition of the other block, another block is an area in price where there was a lot of buying or selling previously. So if we are in an uptrend, there was previously a lot of buying, but if we're in a downtrend, there was previously a lot of selling. Okay, so in a bullish order block, there was previously a lot of buying there, and when we have a lot of buying, we have an impulse move, so the price goes up. But if we have a lot of selling, we have a bearish move. So in this case, there was a lot of buying. So that was what created an upward impulse move. All right. So that is the beginning of the impulse move. So we go right down to the very beginning of the move. All right. So if we go back to our 15 minutes, we have gone from 15 minutes to 1 minute time frame. So if we go back to our 15-minute chart, all right, you can now see that what I selected is very, very different from what you selected if you are using only the body from here. If you are not starting from the beginning of the move, you're actually on a long thing. Okay, if you select just the body and you ignore the down pass, there was somebody I told that if you have a wick, okay, and it's a bearish order block, you take the top of the you take the wick on top, but if there's a wick under it, you ignore that one that's under it. But if it's a bullish order block, you accept the wick that is under and you ignore the one on top of it. All right, so that's what I'm trying to say. All right, so now this is how you draw the order block out. All right, so this is the more valid order block in this case. All right, so in this case our order block failed. All right, this is a manipulation. So let me check it properly first. Okay, I didn't take it to the very bottom. uh we still tapped it, so I will still say that it failed. All right, I will still say that it failed because we don't expect the price to go below the other block at all. As long as it has run through the other block, that other block has failed. So if you have another block area like this, let me say that this is the area of the other block. So some of you will have an other block. Let's say this is a bearish other block now, and you have a move like this, and it did like this, and it continues. That other block is no longer valid. All right. So as long as the price runs straight, it's not what you're looking for anymore. All right. So that is one thing I want you guys to note. Okay. So the other block is a support or resistance. All right. So once we break a support or resistance, that means that that support or resistance has failed. Okay, because its basic job is to support or to resist. So if you have a other block like this and the price has gone above it, that other block is invalid. All right. So this case, this is the true other block area that we're trying to mark. But in this case now, our trade failed, probably because of something on the side. All right. So if you look to the side now, you might find something here. All right. You can go down to a lower time frame and look at it. Let me even go down to a lower time frame just for the sake of completeness. I'll just mark this block here. All right. I can actually mark this guy because he's the biggest out of the two. All right. I can mark him. I can even extend this down to the low, to the very beginning of the trend. All right. So I mark that area like that and go to 5 minute chart. All right. 5 minute chart. Then I go back to that my area and I view it, right? I try and view it. So what we have here is that the trend started, then we made this run above the price. Okay, so I'm going to choose this area as my new order block, and I'll tell you guys the reason in today's class. So in today's class, we are going to talk about the sponsored candle. Let me go to our course outline. We're going to talk about the sponsored candle, even though I'm supposed to treat this topic at a later date. We're supposed to treat this topic at a later date, but I'm going to bring it today so that we can all understand when you should, which other block you should select. All right. So it's not just any other block that you pick. You pick specific ones. All right. So we go to. So what I'm treating today is this the sponsored candle. All right. Sponsored candle. Sponsored candle is an order block as well, but it's a special type of order block. And the reason why we say it's special is because that other block is where the big boys actually started playing in the market. All right. So today we're going to learn how to identify the sponsored candle. All right. So I'm going to choose this as my order block, and I'll go to a lower time frame and check it to see if I can find anything different. All right. So I'll go to a lower time frame, see. Okay. Still know what I'm looking for. I'm looking for something with small wick. All right, a very small wick. 1 minute now. You see, okay. So essentially, this is kind of what I'm looking for. So we have one, two, three candles. Okay, so they follow each other like that, and they basically form the end of or the beginning of the impulse move. All right, so I'll select those three candles as my order block. The three of them like that. Okay, so I'm ignoring that top wick, this topmost wick here, I'm ignoring it. Or since it's very small, so I can put it just for spread or something like that. But you can ignore it or put it. It's very small, so quite inconsequential. So that will be my other block in this case because these are the three downward candle and they have bodies. There's no much wick around here, so I'm going to choose that as my other block and go up to the 15 minutes time frame and see if it's actually worked. So uh, I'm quite sure that this other block will work, but we would go into details about why it works later on in this teaching. Oh, mistake there. Right. Okay, so I'm guessing that this is the other block that these guys actually respected. All right. So now let's go to the sponsor candle. All right. So let me add one more rule for the other block for you guys. So number five, it's it is always the start of the impulsive move, or you can call it the expansion, right? It's always the start of the impulsive move or expansion, right? So don't ignore the start of the wave. Always keep it in mind. So now let's go to how to select a valid order block, right? So basically what we're talking about here is the sponsored candle. What we're talking about here is the sponsor candle. Okay? So the sponsor candle is an order block, but it is the special type. Okay, it is the type that you should trade from, and not the other normal guys. Like no, so when you're looking at a chart like this, you should neglect most other blocks and just look for a sponsored candle on the charts. All right. So yeah, that's just basically it. All right. So what would go now and talk about is the sponsor candle. So what's the first rule for a sponsor candle? Number one, it's um it induces liquidity, liquidity or mitigates another other block that induces liquidity. Okay, so what do we mean by induces liquidity? Okay, so think back to when we spoke about inducements. Think back to when we spoke about inducement, all right? So what was an inducement? An inducement is something that um takes out liquidity and still continues the move. So for example, this one here, this place now, okay, we have liquidity over here, okay, have liquidity, and we formed a higher high over there in a bearish move, but we still continued the bearishness. So that is an inducement. So the other block that occurs here is going to be special to us, is going to be important to us. But the characteristic there is not just inducing liquidity, it has to have other characteristics, and we will talk about the other characteristic now. So the first characteristic is either that it induces liquidity like this, or it mitigates another other block that induces liquidity. What do I mean by mitigation? Let's say that this is the other block that um, induces liquidity, and this is our important order block. If we if the market, as this is an assumption now, an assumption. So if we have the market coming down like this from that other block, all right, and then it goes back up into the other block, what we call this thing is mitigation. So mitigation means that it goes back to balance that area out. It goes back to equilibrium or whatever of the range. Okay, so it goes back in there and touches it. Okay, it goes above equilibrium and touches it, so it mitigates it. So if I say this candle, if I say this candle was mitigated by another candle here, that means that that second candle came into that candle and touched it. So it came into that candle's area. So so if we have another candle here, all right. So this candle mitigated this one. So an imaginary candle is here. Okay, so this imaginary candle mitigated this guy here. All right. So the sponsored candle is either that it takes out liquidity like this, it induces liquidity like this and continues, or it mitigates another candle that induces liquidity. All right, so that's the first rule. It induces liquidity or mitigates another block that induces liquidity. So the second rule is that there should be a violent move after it. it, right? Then the third rule is that it causes it causes or leads to leads to a break in market structure, market structure, market structure. Am I typing? All right. So these are the three rules. Okay, these are the three rules of a good, valid order block, or what we call a sponsored candle. All right, or what we call a sponsored candle. All right. So um, I might also add something else, even though okay. Let me just add something else. Um, Let me ignore it for now since I've not got into liquidity. Let me leave it as this three. All right. So now, rule one, it induces liquidity. It induces liquidity or mitigates another order block that induces liquidity. Assuming that you guys understand this. All right. So rule number two, there should be a violent move after it. What do we mean by a violent move? You look at the charts, look at a violent move. So the other block that precedes this violent move, we may study it to see if it has the remaining two characteristics. All right. So if it has the remaining two characteristics, we'll be looking to sell from here anytime price reaches there. All right. So um okay, let me add one other rule. All right. It should be it should be on the side of the trend. Else it might not reach your targets. It might not reach your targets. Okay. So the truth is that if you trade a sponsored candle against the trend, it may be in your favor, but it's not last long. All right. Because a sponsored candle is very, very strong. So most likely, no matter what, most likely you will have a reaction from that sponsored candle, but it will not last long. All right. So let me say that let's assume that um we have a bearish move here. All right, we have a bearish move, and we just turn around the bearish move, and then we bought at a sponsor candle here. All right, so that's a good buy since it's on the line of the new trend. All right, so we bought again at that sponsor candle, also on that good buy. All right, so if there was a sponsor candle, let me say up here, there's a sponsored candle. Once price goes there, you can sell there, you can sell there. All right, but it will not. You should not expect it to come down here to reach this target over here. You should not expect it to do that because you are against the trend. So you may sell there, but just don't expect your trade to last long. It's just safer for you to be buying these ones that are on the side of the trend. So you continue it like that. All right. So it should be on the side of the trend. All right. So if you are in a bullish trend, you should be looking for bullish order blocks. Sorry, when did I get disconnected? What was I saying? My hotspot just went off suddenly. Sorry. What was I saying when I before I disconnected?
So yeah, you are talking about the like if like if there is a retracement to a sponsor candle, so it's not going to sell for long.
Okay, yes, yes, yes. Thank you. So, so I was saying that you should try as much as possible um to not trade a sponsor candle against the trend. Okay, so if we're in a bearish trend like this, you might, let's assume, this is an assumption, that there's a sponsor candle here. That would be a good sponsor candle to sell from. All right, that would be a good sponsor candle to sell from. But if this was a bullish trend, all right, let's assume that the trend has changed here. You can sell from there, but it will not last for long. That's what I'm trying to say. But this is a bearish trend, so this might be a good place to sell. This place may be a good place to sell. But of course, I will not just say it like that. I have to study more before I determine whether I can sell here or not. All right. So, but basically, Sha, if you have if you have a trend, all right, and then the trend suddenly changed, all right. If you are going up like this and you are sure that this is a new trend based on your analysis, and let's assume that there was a sponsor candle here, you can sell from that sponsor candle, but don't expect your trade to last long by going below this liquidity. So this place is here is liquidity. And most times we target the first obvious liquidity as our first target. All right. So don't expect it to come down below here. So it may just do something like this and continue going up. So try your best to only trade sponsor candles on the side of the trend. All right. Okay. So now we are going to go ahead and look for um sponsor candles. All right, so I'm going to go ahead and look for sponsored candles. Okay, but I've not explained my last point. It causes or leads to a break in market structure. What is a break in market structure? A break in market structure is a continuation of our trend. So let's say I'm in a bullish trend. All right, I'm in a bullish trend. I'm in a bullish trend like this. All right, I'm in a bullish trend like this. So on this bullish trend now, we have sponsored candles that I'm buying from. So there was a sponsored candle here. I bought there. There was another one here, and I also bought it. All right. There's also another one here, and I bought it as well. All right. There was also another one here, and I bought it as well. So if I buy a sponsored candle here, all right, the minimum place I expect that candle that trend should to go to, since we're in an uptrend, the minimum target or the first target I have, the first main target I have is the next high. So we are since we're on an uptrend, we're expecting a higher high. All right. So we're expecting a higher high. We're expecting a higher high there. So um if we bought from this sponsor candle, all right, and it forms as it's going up now, it will form another bullish order block here. All right, it will form another bullish order block here because this is the beginning of the impulse. So if it goes above here, all right, that other block is valid because it has caused a break in market structure. So when price goes above here, that's what we call a break in market structure because it has formed a new range. All right, so it causes a break in market structure. If paraventure it doesn't cause a break in market structure, it does like this, I would not trust it when the price comes down here. I will not trust it to buy it. All right, I will not trust it as a good buy. I won't trust it as a good buy. It is very likely that the price may induce it. It's very likely if it doesn't break here, it's very likely that if the price should come down here, it might induce it and continue going up. All right. So if it doesn't cause a break in market structure, I will not regard the sponsor candle here as a valid one. I will not regard the other block here as a sponsored candle, all right, because it doesn't cause a break in market structure. So only if I see something like this, then I will buy it. I will have confidence to buy it. But if if it doesn't do that, okay, it might still come down here and it might still be valid. Okay, it might still be valid. It might still be valid, and you see the trend doing like this, still going up. Don't let this thing um make you feel anyhow. You are just being careful, okay? And the most important part about being a trader is preventing unnecessary losses, okay? So don't buy here because there's a chance that it might work, all right? Because there's a chance that it might work. Wait until you see another one that makes a new high, okay? So it breaks market structure. So this new one now, I'll go ahead and buy it, all right? So I'm not in a rush to use every single other block I see. Okay. So this new one that formed here, so it broke market structure, it creates a violent move to the upside, and let's say there was some liquidity that it induced down here. Okay, so that would be a valid sponsored candle. All right, so that's what breaking market structure means. That's what a breaking market structure means. So now I want to go into the difficult, or should I say semi-difficult part of identifying these candles. All right, for identifying these candles. So here you can see a violent move. You can see a violent move here. You can see a violent move. So what we'll be looking for is the candle that sponsored this violent move. That is the sponsor candle, the candle that led to this whole impulse, this whole violent move. All right. So um let me try and look at this. So first of all, we look for a candle that has an inducement. All right, we look for a candle that has an inducement in this area. All right, so an inducement, or it mitigates one that has an inducement. So what I can see here is an inducement. There was this candle here. There's this low. This low got taken out on a lower time frame. All right, so it got taken out by this candle. Okay, so this candle comes down to mitigate it, but it's not properly mitigated. It did not come down very well. Not really come down very well. If it came down very well, I expect it to come down to maybe somewhere like this, maybe down here a bit. Okay, so let me say it gets down into like halfway of the week or close to halfway of the week. All right, so I will trust that better. But anyhow, that's not really my main concern. My main concern now is that um I found this candle here. Okay, I found this candle here, and it takes our liquidity, and after it we have a big run up to the upside, but I can't really see clearly because of this time frame. So I'm just going to mark out the area I think may have caused it. I think it's this area, so the whole candle. All right, so this guy is not a down candle on this time frame, but on that time frame you might find a down candle around there. So I would just reset the chart like this and go to a lower time frame. Go to a lower time frame. So let me check five. Checking five. Checking five. So this thing is far back. I hope I can find it. Okay. 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 So here now you can see that inducement clearly. You can see that um you can see that price took out a low here. We took out this tiny low here. You can see we took out this low. I will continue this trend. All right, so you can see that. So we want to basically find where the impulse move started. We want to find where it started. Okay. Um. So it started around here. The violent move started around here. Okay. So the violent move started around here, and this guy is my new interest. I'm not sure if you guys will understand what I'm saying. Okay. This guy is my new interest because it goes below this candle here. It goes below this candle. So he is another area of interest. Why? Because it goes below this candle. If I look closely, it induced that candle. You can see the low here. You can see this low. So this low goes below this low. All right. So it induces it, and also it mitigates. Also, it mitigates this other bigger candle here. It mitigates this guy. So it came down to touch this guy area. All right. So I'm also going to move my rectangle to just that guy, to just that candle. All right. So I'm not even sure that this candle worked out. I should have created some example before the class. But anyhow, let's look at the trend. If we ever go down to that candle, if that candle ever worked out, I'm not sure. All right. This is just random chatting. Okay, so if it's the advanced analysis now, you may see something reasonable. All right, so basically, we want to draw it out and see if that sponsor kind of worked out. Okay, it might have worked out here. I don't know. Oh, perfect. So you can see that, guys. Basically, you can see how this is our very tiny point of interest. Okay, so you can see how powerful a sponsor candle is. So now, let me go back and explain the characteristic of this candle and why I chose it as my sponsored candle. All right, so we'll go back to our notes now. We say it induces liquidity or mitigates another order block that induces liquidity. So in this case right now, okay, if we go into the chart, okay, you can see that um that that candle I chose, that candle that I chose, all right, this candle here, let me draw it properly. This is the candle. All right, so it went above, sorry, it went below, this candle beside it. Okay, this candle beside it, it went below that candle. All right, after going below that candle, it continued going up. So that reminds us an an inducement. So an inducement works like this. In an uptrend, if we have an inducement, it down then comes down and takes out a low. All right, but the key thing is that it still continue the trend. All right, so something like this is exactly what this candle here did. It was up before. All right, it was up before, then came down and took out a low. All right, if you go on a lower time frame, it will look like this that I drew. Okay, but on this higher time frame, you have to learn how to understand what the candlesticks are telling you. So that's why I gave you guys that video about blending the trend, or blending the candles. So by reading what this candle did, you can see that the candle went below a previous low and still continued a push higher. All right, so what is another reason why we chose that candle as our sponsor candle or our valid order block? The second reason is that um there should be a violent move after it, and you can see clearly we have a violent move after it. All right, so after that candle, we had a violent move, very very violent. Okay, very very violent. All right, very very violent. And the third rule is that it causes or leads to a break in market structure. So since we're in an uptrend, this candle should form a higher high. All right, and you can see that it formed a higher high. It breaks market structure. All right, it breaks market structure. So that's the third reason why it's valid. Okay, that's the third reason why it's valid. All right. So the last reason is that it should be on the side of the trend, else it might not reach your target. All right. So it should be on the side of the trend. This is an uptrend. Okay. So once we break this high, we know that we're in a reversal pattern. All right. So this downtrend is over and we're starting a new uptrend. So basically, this guy is on the side of the trend. All right. So you can see it took a very, very long time, Shao, but the market still came down to that small place. You can just look at, is it get to the mean threshold? That small tiny area, very tiny drawdown here. All right. So very tiny drawdown. If I should measure it, I think it would be like, can't even see. Anyhow, okay, this is BTC. I can't count it in pips. Let me count it like this. Let me see how many dollars. So that's $49. All right, $50, $50, and the Bitcoin price is like 20 something thousand dollars. But so the main thing Sha, is that it is a very small zone. So you can imagine this whole big area, this whole big price move, and then the only area of interest is this tiny thing that happened here. Okay, so some traders be worrying themselves, trying to, okay, you can be buying all these smaller ones, so but you should know that eventually we'll come to this sponsored candle to test it before running. And since we're in an uptrend, our first target is to make a higher high. All right. So we first of all broke market structure here. Okay. So we are now in an uptrend. So once we came down to our sponsor candle, the first target is to break market structure. And our target was hit perfectly. Our target was hit perfectly. So if you wanted to trade this, what you will do is that you will go to the sponsor candle. All right. So you have your entry at the beginning of the sponsor candle. So let me use a long position. So this is your entry here at the sponsor candle. Okay. Your stop loss will be at the end of it or just below it, a little bit below it. All right. And then you will draw this to the left. Okay. So your target will be your target will be after we break market structure to make a new higher high. So that will be your target. All right. Your target will be to make a new higher high. All right. That's your target, to make a new higher high. And you can see that it took some minutes or some, maybe this may be like a day or two, but we eventually hit our target. And the risk to reward here is 29R. So that means that if you risk 1% of your account, you will get 29%. So for example, if your account size is $1,000, okay, if your account size is $1,000 and you risk 1%, which is $10, okay, let me bring the account size down because we are all beginners here, right? So the account size is $100, okay. So if you risk 1% of $100, we are risking only $1, just $1 on this trade, just $1. All right. So what we'll get from this trade is more than $29. Okay, more than $29. If you go and risk something like $10 on this trade, you'll be getting $290. So this is insane using the sponsored candle. It is insane. It's a no-brainer. Like, you totally be killing the market. It's just that you have to be very, very careful. You have to study hard before you make a trade. You have to go from the top to the bottom. Like, you have to scan the market very well to know that you're not missing anything. All right. So going back to the rules, the rule is that it induces liquidity. All right. It is always the start of the impulsive move. Don't ever forget this rule. It's always the start of the impulsive move. You can remember that I selected that candle at the beginning. I selected that candle by the side here, but I realized that it was not really the beginning of the impulsive move. So I had to move it to where the impulsive move just started. All right. So that's what gave us this very small zone, and we bought from there. Or hypothetically, if I had bought from there, we will take our profit here. No more, no less. All right. So later on, we can now look for another sponsor candle, maybe somewhere around here. All right, we may have another sponsor candle there. Okay, so here will be another sponsor candle. If I draw it out, there should be another sponsor candle here. Just I can just look at it and find that out. All right, so in this case, this sponsor candle is against the trend. So the trend has changed in this case. As you can see, it's now going down, right? But you can still see that the sponsor candle is so powerful that it's managed to make a small move. Okay, it will always react. Okay, so um when we are in a trend now, most times the trend usually starts correcting at a sponsor candle. That's what I noticed recently. Once you hit a sponsor candle that's against the trend, it will start retracing. All right, so you can still see that the sponsor candle still made the market react a bit before
Yeah, I want to ask a
it
question.
continues. Yes, yes, yes.
So, please, how do you know that this very sponsor account that failed?
Eh?
Can you hear me?
I didn't really hear the last part. You see, how do I know that what? Please come again.
Yeah, like this very one that failed, the second one that you highlighted.
Yes.
How do you know that it is against the market? Like I mean, since the other one was create an impulsion, then come back to the point of interest, then
Yeah.
make another impulse move. So the
Okay,
second
okay,
one that you highlighted, like
okay.
I was hoping that one is also going to work
Okay,
out
okay,
for
okay,
you.
okay. All right,
So
this
how do
this
you know that
this one
it's
here now,
against the trend?
you can't actually know. I will if I was in this market now and I was trying to trade it, I will have bought here and it will have been a loss, and that is okay. So this is a losing trade. All right, so this is a losing trade and it's fine.
Okay, it is normal for it to have for loss to occur, like this kind of thing to accept the loss that okay,
Yeah, it's normal for you to accept the loss. If it doesn't work out, that means that the trend has changed. So if my sponsor candle should fail, that's usually a big sign, a very big sign that the market has started changing direction and I should start trading in the new direction. But what may have happened here, okay, is that if I look on a higher time frame, maybe it was a bearish move, and this thing that I'm buying here is just a retracement. So it may be that we are in an actual bearish environment, all right? So I'm not sure, but I will check a higher time frame. Let me try the 1 hour chart. Okay, so as you can see, this is a bearish condition. Okay, this is a bearish condition. So there might have been something by the left here. If I go to the left, okay, so we can see another violent move here. Where is it? Okay, so I can try and find the sponsor candle, but let me just give a general area. This is the general area that may have caused that reversal in the trend. This is the general area that may have caused it. All right, so if we draw it to the left, that might have been what caused it to reverse. You can see. All right, so we can go deeper and break it
you see
down.
that?
Yeah.
Okay, thank you. Please, I have another question.
Okay.
This very place that you take as the violent move,
Yes.
there was another move of like there's this bullish
Another one here, ba.
mask and of like
This one
yeah
here.
like
Okay.
before this yeah why did you
Yes.
choose this place?
Okay. The reason why I choose that very one is because there is mitigation in this area. All right. So this thing has a violent move. What we call mitigate. The reason why we trade a violent move is this. All right. Is what we call fair valuation. Once we get to imbalances, you guys will understand. So basically the theory is that if we have normally the market usually moves small small, usually moves small small. Okay, Abi, you notice? Am I right with
Yeah,
this?
sure.
But sometimes it may move violently like this, boom. All right, without
Yeah.
touching all these guys, they just ignore them and fly away. All right, then it will now continue moving. So it might continue moving like that, right? It may continue moving like this. It may continue moving like this. All right. So the theory of fair valuation is that this area that he left here without anything, this place is unmitigated. So Remember when I said mitigation is when one candle touches another candle's area. So as the market is moving, it should be touching the previous range area. Okay, so it should be touching the previous range area. So if we leave a violent move like this, it is more than likely, okay, that later on the market will come down to fill in that place. That is what we call an imbalance, but we've not gotten there. This is what we call an imbalance. And the reason why I would not choose all these other guys here, okay, the reason why I will not choose them is because they have mitigation. What do I mean by mitigation? Mitigation is um mitigation is this. Now you can see all these wicks, okay, all these candle wick touching each other. All right, so one candle touches the next. First of all, let me go back. This we have this low. All right, we have this low here. All right, we have this low here. Okay, so this low, if the market should come and touch it, okay, that means we have mitigated this area. If we have a violent move here now, we have a violent move here, okay. Once the market comes, let's say we have a violent move there, it goes down very fast. Once the market come and mitigate this area, anybody that's inside here, we may not mind them, okay. We may just ignore them and continue falling, okay. We may ignore them and continue falling because once we touch this previous low, we have balanced the market because we have mitigated the previous range. Mitigated the previous range. So when the market is going up, we expect it to be mitigating the previous range. Okay, so once we touch the previous range high or the previous range low, we have mitigated it successfully. So the reason why I would choose here now is because if you look at the price action, okay, if you look at the price action, this was that previous low, right? This was that previous low. And you can see that the market went back, touch it. There's another week that came back and touched this previous candle. Okay, this week came up, but it did not really do this one too well. This guy came inside and induced it. So there is some tiny mitigation here. All right, there's some tiny mitigation here. Okay, that is why I left this area alone. I left this area alone, and also there is this inducement inside here. Oh, let me try and make it visible. Let me try and make it visible. Let me move this out of the way. Having a hard time seeing this thing now. Okay, so you can see that this guy is an inducement now. So it goes above this previous high that is here. There's this smaller candle has a high. All right, so it went above it, but still continued the trend. All right, so this place now is a key turning point in price. Is like a new range was formed. If we induce something and continue going, that is where a new range is formed. So that, and because we have all these previous candles touching each other, all right, even this one came up to touch this other previous candle that was not really touched like that. You can see that this candle here has a violent move. This candle has a violent move. All right, so it didn't really, this second candle didn't really go inside and touch it. So but this candle finally had to come inside and mitigate it properly before we started going down. All right, so I will regard, or I will assume, that all this whole area up here has been mitigated. Okay, even though the move is still quite violent, but if you look on this time frame, you can see wicks. All these wicks are mitigation, they are touching each other. If I go on a lower time frame, you will see that what you will notice is that it kind of looks like this. On the lower time frame, it kind of looks like this. Okay, that's what it will look like on a lower time frame. So they have mitigated each other, and then we now have an inducement here. Okay, so an inducement is where we can have a new sponsor candle. All right, so that is basically why I ignore this place. I ignore this place because it has been mitigated already by just looking at the chart. By just looking at the chart, giving the chart a rough view, I can see that this area has been mitigated. This range has been mitigated. All right, or even if we might say that it may not be totally mitigated, all right, but this area, as long as There was an inducement there, then there was a violent move. There was an inducement and a violent move. And that violent move broke market structure by going down below the previous low. All right, it broke market structure by going down below the previous low. That is going to be a key turning point in price action. That's going to be a key turning point. The market might still um be down here. As it's down here, might still come up and still smash that zone. All right, this uptrend might still continue going, even though I doubt it. Okay, it might still continue going. All right, and cancel out this area. Might still continue going and cancel out this area, but since it had an inducement, a break of market structure, and a violent move inside one area, it will surely make price react once price gets there. So that's why I chose this area as the place that market might react from. Okay, so I'm not saying that it will start flying down south from here. It might, but it's not totally sure. Right? It might still come up and maybe come up into this area. We never know sometimes never know, but you can determine the area that will surely have some kind of bearing, some kind of reaction where price will touch and shake a little bit. So um um the summary of what I'm saying, Sha, is that this place has been mitigated to a good extent. That's why I did not choose this sharp move area up here. That's been mitigated. This is the previous range, and this guy has touched it a little bit. So that's enough mitigation for me. Do you understand my long explanation or is confusing?
Yeah, thank you.
All right. So basically, the trend changed there. So that second sponsor candle on the 15 minutes time frame, that second sponsor candle. If I did not check the 1 hour time frame and see a supply zone, I would have bought here for sure. I would have bought here because there's a sponsor candle here. It will have gone for me for a little while and then violently hit my stop loss. So it happens in trading. So I would have lost 1% here and gained 29% here. So that's a total of 28%. All right. So, but then I don't want you guys to come into trading expecting this kind of trade. This thing might happen once a month, once in 2 months. All right. So if you are trading on a normal daily basis, weekly basis, maybe seeing 1 to 10, 1 to 5, 1 to 7, all those kind of things. Not really 1 to 29. These trades are very very rare. You can see how long I had to wait before it came back down here. Okay. So it is quite
I
rare.
actually saw one of these trades today,
Abi.
but the thing stopped me.
It happens, actually, it happens. But the thing about all this smart money concept is that if you can get a good trade that gives you high RR, it's going to wipe out all your tears. You can wipe out your tears for a whole month. You might be losing for a whole month, and let me say you lost 10 trades in a row, and you get one trade that gives you 1 to 15. That trade has cleared all your losses, your 10 losses, and put you in profit. So that's
And
just,
CJ, I don't think those people can trade every day. Like at the setup,
yeah.
it take a long time before it
Yes, yes,
comes.
yes.
Like everything, they wait for change your character. Like some other things, like they wait for it before confirmation. So, that kind of setup, it will take like forever. And those guys, they wait for everything to fall.
Yes, yes. But what
I
I've
don't
seen,
take
what
Some
I
that
may
that
even
long.
fake them. Some may even fix entry and all that.
but what I'm trying to
I
tell,
don't think it actually takes that long
doesn't
because
take that long. You can, it depends on your time frame.
I have guys that trade that on 5 minutes, ten
Yeah,
minutes.
5 minutes. You can see that this is a 15-minute chart, so it will take quite some time. But if it's a 1 minute time frame, you can even trade inside here. Okay, you can trade this other block. You can trade this other block here. Okay, you can trade this other block and buy it and go like this. So you are getting a good trade. It may not be that much RR, all right. It may not be as big as this one.
Yeah,
You
the one I even missed today was 5 minutes.
can see.
Is it
So
just it
so
just
this
it that stopped
this
me out?
this trade now you have to wait for. Let me see. This trade, the person just have to wait for. Um, let me see how many minutes. This is 8 hours 30 minutes. Okay, it's quite long, sha, but it's not really long like that. 8 hours 30 minutes, so less than a day. Your trader has manifested. It may even be like he saw it when the price was here, so you just have to wait for 15 30 minutes. So not really that you wait too long, but crazy trades like this one. This guy is a crazy trade. I call it any trade that's above 20 R. is a crazy trade. So, but crazy trade like this, don't expect it often. Expect it like once in a month, once in 2 months, few times a year, sha. You understand? So that's just it. But I know that the sponsor candle will be tough for you guys, but we have to close to this class. This is already 9:02. Tomorrow we'll continue and study this thing more, even though that we are wasting much time. Tomorrow, what we'll do is that we're going to talk about imbalances so that you guys can properly understand what I mean by violent move here. Okay. So I'm going to talk about imbalances so that we can move on. So we're wasting a lot of time, right? So we'll talk about imbalances and liquidity pool. Then if you still have time, we'll go and look for more example of sponsored candle on the chart. All right. So that's what we're going to do. Today, no assignment, I beg. I don't have strength. No assignment today. So I'll end this class. I just hope that the recording works properly because there was a time that I got disconnected and I didn't start again. But anyhow, Sha, do you guys have any questions before we close?
No, no questions at all.
All right, now. All right. So a sponsor candle. So summary of today is that a sponsor candle is the correct kind of order block to trade in. Okay, don't concern yourself with other types of order block. Just look for sponsor candle on the chart, and that is where you'll find your best trade. All right. And if you don't see, if you can't see a order block clearly on one time frame, just draw the area and go down to a lower time frame to refine it. Okay. That's lesson number 2 for today. Lesson number 3 is that the sponsor candle has an easy rule that you can follow. These are the 3 easy rules. This one is just like an add-on, but these 3 rules are the main rules. All right. So yeah, that's the end, guys. I wish you guys a safe, should I say safe, a good night's rest. All right, and a good time at work tomorrow. So good night.
Good night, sir.
Good night.